Greetings, everybody. Greetings. Give me just one moment. Getting on here, getting my goodies up and running. All right, good deal. Fix my lighting a little bit. Yeah. Yeah, I'll have to play with that next time. All right. Yeah, let me get my chart shared, everybody. If you would just pop in, drop in, say hello. Let me know what specific tickers that you guys are interested in, and we'll get on it. I am, first of all, going to share my screen. I am in a NASDAQ trade still. You guys, I talked about that yesterday. So we'll take a look. Morning, Alex. I see you in there. Good morning. Still in that NASDAQ trade, boss. You know, it's funny how you panic on something and it turns out to work nicely. But yeah, let's take a look. Let's see. Let's look at today's calendar of events real quick. Let's see here. Share this tab, and I'm going to go full week. And I know yesterday we did have the USD ISM manufacturing PMI number come out. Was not looking very good, guys. This thing's in contraction territory for the manufacturing sector. Let's flip that to just red for a moment. Get rid of everything else that's not as huge of an impact. Didn't you want to get out once it got into that supply zone? You know what? I thought about it, but my belief was that that demand zone that I ended up getting into would have enough power to push through it. And so far, it's gotten over halfway through that supply zone and obviously has gotten the rejection, which I expected. Now, I've choked it with my stop loss. So I wanted to give it a little bit of wiggle room, and we'll get into the chart on that here in a moment. I was just looking at it off screen over here. Give us some wiggle room because NASDAQ actually is now the strongest item on my top setups. Well, I guess second strongest now. Gold's actually leapt ahead of it, as you can see there. So, yeah, my NASDAQ trade, it's looking pretty good. It's 1 point away from very bullish. So I'm definitely going to be excited to see if I can find a spot on gold. Now, gold or silver, really. Yeah, silver is still on there as a bullish 6 as well. First time looking at the top setups, with you this morning. So we'll take a look at that. But yeah, I just felt like I would choke it a little bit. In fact, I'll just flip on over to my demo chart. We'll just take a look at that first thing. How about that? Okay, NASDAQ. So yeah, there's the supply zone that we talked about ad nauseum yesterday. So here was my thinking on this. So number one, okay, obviously I started with my supply zone, my take profit underneath, the main demand zone I bought in. So once price moved away, I moved it to break even. And then once it got to the supply zone, then that's when I moved my stop loss from break even up to below this little swing point here. Because if we take a look at that little swing point right here on a 5-minute chart, okay, let's see here. Actually, not that well. Yeah. So I was looking at this little 5-minute zone hiding right here, guys. Okay, right there. This. In fact, it's funny because on my other accounts, I actually moved my stop loss below this swing point right here. I just haven't done it yet on this account. So now that I see that, I'm actually moving this stop loss, okay, trailing in a little more of my profits, right? Because I saw that as a potential strong 5-minute supply zone, 5-minute demand zone. Now, this is my line in the sand, anything below this demand zone area. As you can see, okay, looks like about 3 hours ago, it dropped into that demand zone. And what did it do? It bounced nicely up. So it's not a place I wanted to enter a trade because I was already in the trade, right? I don't necessarily want to add to this trade because of the supply zone that you mentioned. So that's my line in the sand. Okay, I know going into it, once we got into the overhead supply, just to recap, that it's going to get some reaction. So yeah, initially when I drew this little green line up, this was kind of my expectation. Bounce in, catch an ask somewhere, because you're going to catch some resistance, have price drop down. And when I drew this yesterday, this I wasn't really looking too deep into this 5-minute supplies, 5-minute demand zone. My gosh, getting my words mixed up. I was more interested in my line in the sand being down here. But as price came in and then dropped down into this area, this would have been 3, 4, 5 o'clock my time yesterday. Then that's when I decided that, okay, it had a pretty good bounce, pretty nice looking wick above it. So rather than give it this much wiggle room like I initially did, I just identified that smaller time frame demand just to lock in a little bit more gains, right? That's really kind of what my thinking was on that. So this is my ultimate line in the sand. And yeah, as you can see, it got pretty close to tapping me out for my trailed profits. So if, and I expected, even on a small 5-minute time frame, I expected that we would get this bounce from this little 5-minute zone, because this 5-minute zone over here, even on a smaller time frame, broke a structure and just pushed up nicely. And if we look at the size of this zone, the range, okay, that you're looking at about 20 points, and then you measure to this little wick up, right? 2, 4, 6, 8, 10, 12. So basically that's a 6.5 to 1 move, right? If we're just looking at the potential profit. So I felt pretty good that I would get some type of a decent bounce off that. And that's exactly what we've got. So yeah, at this point, obviously, hopefully it just keeps chewing through the rest of the zone. But if it doesn't and ultimately turns around, then I'm out of the trade for profit. That would be about a 1.5 to 1, something like that. Let's measure our profit. So this was my entry. Okay, stop loss below, it's 130 points. Okay, so yeah, we're looking a little over, about a 1.25 to 1, right? So obviously it's not a 3 to 1. My 3 to 1s, 4 to 1s, 5 to 1s come typically when the zone I buy off of has the power and strength to chew through the overhead supply. So yeah, that's what I'm looking at. I mean, ultimately, if I take profit just ahead of that stop loss, then obviously, yeah, I'd be gaining from where my stop is now. I'd be gaining another 80 points or so of profit. But this is just where my risk tolerance comes in. My risk tolerance says I'm fine with losing I'm fine with losing a little bit of that unrealized profit if it means potentially busting through that zone and then chasing the next higher supply zone, if that makes sense. So yeah, as price continues to go in your favor, you just keep moving up the stop loss with the smaller time frame zones. Exactly. So back when I started trading, I always set my trades on a strict 3 to 1 reward risk ratio, meaning as soon as it hit my 3, whatever my 1 unit is of zone plus the stop loss, the spread and that stop loss, I always would multiply that by 3 and then make sure that there's no supply zones or demand zones if I'm, shorting within that 3 unit range, if that makes sense. And it was fine. It worked nice. But then I got to the point to where some of the trades I was getting in was going even further. They were going 4 to 1, 5 to 1, 6 to 1. So I saw after a bit of time that I was missing out on that additional profit, if that makes sense. Because if I'm getting into a trade, that zone should have the strength to push through the opposite zone. It should, because I'm staying in trend. Ideally. And the trend is your friend till the bend at the end. Well, I know I'm going to get a bounce whenever price hits the opposite zone. So anyway, yeah, I just kind of got annoyed with, just taking the 3 to 1s and missing out on the 4 and 5 and 6 to 1s, if that makes sense. So yeah, I personally, with my risk tolerance, am okay risking that additional unrealized gain for the potential of busting through that zone and then chasing the opposite zone, the zone ahead of that. which in this case would, in this case, I actually set my ultimate take profit up here at this little swing high because I didn't really see anything too exciting into these as far as zones in this area, because you see how lazy this price action was right here. Now, obviously, the zone we're chewing through now was very strong, but up here, I'm not too worried about any of this. So I just set my take profit up there. I mean, there's really no right or wrong way to do it. Right? In my old days, I'd have been out of this trade for, well, I guess that would have been probably a 2-to-1. But yeah, we'll see how it goes, right? Can't make money if you don't enter, right? So we'll see how it goes. But yeah, feel pretty good about it. I mean, and keep in mind the only kind of the downfall to this trade from the get-go is the fact it wasn't really a true strong uptrend on this. This was more I'm trying to catch a little bit of a push out of this sideways congestion that you got. It's basically a pennant, right, or a flag. And that's why I drew up these white lines above and below price, just kind of connecting all these lows. So yeah, and then ultimately the higher time frame supply zone's up here. That's going to be that daily, right? So yeah, no, great observation on that. It'll either pay off or it won't. But either way, I've already profited that 1.25, 1.25 to 1 or whatever it is. So we'll see how it goes. Are you trading anything right now? Let me know if you got anything going on this week, first full week of the year. Any charts that you'd like me to look at, we could definitely do that as well. As far as the economic calendar, guys, we don't really have anything during the intraday session for here in the Americas anyway. Not until Australia's inflation numbers come out. Okay, that's 6:30 p.m. my time, Central Standard Time. So no other red folder events this morning. So it's basically just kind of a continuation of, kind of the fallout of the manufacturing PMI, plus obviously everybody's hair on fire with the Maduro capture. So that's basically kind of the prevailing tailwinds. My caffeine rolling this morning. So yeah, that's it. I mean, if I flip on my orange folder, yellow folder, let's see if there's anything that might affect the individual currencies real quick here. Now, actually yesterday, yeah, funny enough, set a limit order for Aussie yen for a short 105.35. Yeah, let's take a look at that here in a second. Hit and rejected, but I feel I went against the trend, but also felt the supply zone was strong. Yeah, you know what? At the end of the day, look, for me, obviously that's one of my rules. Stay with the trend. That's what most people's rules are. But sometimes when the fundamentals and the sentiment shift to the opposite direction of the trend, man, those make some of the best trades when you can, I guess you could call it front running it, right? Front run the trade. I mean, I don't think it's necessarily a good thing for beginners. I mean, I don't know. How long have you traded? I'm just curious, Alex. For beginners, it's definitely not the greatest of ideas. It is more of a experienced move, I guess you could say. So yeah, it's 5 years, but in crypto, wild, wild west. Woo! You want to talk about wild, wild west? Man, I did penny stocks. I traded penny stocks back in 2020, 2021 during the shutdown, the COVID shutdown. Woo! You talk about wild, wild west, man. Those assets, man, I saw them every day jump 100, 200, 300%, 500%, sometimes 1,000% on some of these penny stocks I was trading. It was nuts. It was nuts. So I don't know what's crazier, penny stock trading on a 1-minute chart or, the futures trading scalping that some of our coaches do. I don't know what's crazier because I've never really done the futures trading, but I tell you what, lost years of your life trading it. That's right. But I enjoy the stability of the longer time frames way more because I can get into one of these trades like this NASDAQ trade, right? Yeah, I was sweating it. I got into it Friday, and obviously, I mentioned to you guys yesterday, I think, that I totally forgot to close it out Friday like I normally do. I always set a 3:45 alarm so that it warns me 15 minutes before the market closes so that I can go close my open trades. totally slacked and forgot to do that on Friday. I had a lot going on. So yeah, I was sweating it over the weekend when they announced the capture of Maduro because I didn't know what the hell was going to happen. But yeah, sure enough, it's going in my direction. Okay, but yeah, that's yeah. I mean, being in those penny stock trades for sometimes seconds, it's just crazy. So, but it was good knowledge. It helped me a lot. It helped me to really verify the fact that I like the higher time frames. It's just nice to be able to put on a trade for a handful of days, go to sleep at night, not have to worry about it. So, but yeah, crypto, yeah, that's something I haven't really dug too deep into. I mean, I trade Bitcoin from time to time. But as far as all the other altcoins and everything, I just personally haven't gotten into it. I like established currencies that have been around for a while. So, I guess probably that puts me in the dinosaur camp, right? But yeah, I like currencies because I understand, me personally, I understand the economic releases a lot better. I'll eventually probably get into all the coins and everything, but for now, hey, you know what? This is where I perform the best for now. So we'll get into that in the future, probably. Fed up crypto, too much manipulation. Yeah, does need regulated. Doing a short new listings. Yeah. See, that just twists my brain just reading that. No, I like established trends. I like fiat currencies that behave themselves. I mean, I like volatility, but I don't like too much volatility. Too much volatility starts getting, unpredictable at times. So yeah, I could very easily see how cryptos are like that. But yeah, and I used to I don't want to say badmouth, but I used to kind of look past Bitcoin back in the day, and I always said that. I'm like, if it ever behaves like a fiat currency, I might have some interest in it. But at the time, I just didn't. So, but yeah, over the last year or so, I realize it's starting to kind of calm down a little bit. It obviously leads most of the other cryptos. So yeah, I feel pretty comfortable trading Bitcoin now. It respects supply and demand zones pretty well. I mean, it still has its share of manipulation, but it's just easier to see now because the moves aren't just looking like an earthquake telemetry machine as much as it used to. That makes sense. So, but anyway, looking back over here, guys, the Swiss franc yesterday, so it had some pretty dirty data. Let's see here. Yeah, so starting with the retail sales number. Now, this is a yellow folder event. This is a light impact, but it still has a bearing on the individual currency. So not necessarily was I worried about any of the Swiss franc currency pairs, but just more or less the evolution of the franc of late. And they missed on their retail sales number. They also missed on their manufacturing PMI number. So they're in pretty ugly contraction territory. So when these reports came out for the Swissy, man, that dropped it down. That dropped it all the way down to the a tie for the worst performing currency of late. Okay, let's take a look over here at our macro scanner, the Eco Surprise Meter. Okay, so this chart, as always, this just basically very simply says, hey, what percentage of economic reports? So whether that's the orange, the red folder, or sometimes the orange or even yellow folder, what percentage of those releases are exceeding expectations from what the economists predict? So as you can see, the Swiss franc over here is now down to 17%. So that's not good. That's what you call fundamental economic underperformance. And it's tied with the euro and the pound for the futility, if you will. The strongest currency at the moment is the Canada dollar. Now, it was the Aussie dollar for a while. The Aussie dollar was performing awesomely. It was exceeding expectations or economically outperforming on all of its reports there for a good solid month. But all of a sudden, we've had some negative reporting come in for the Aussie dollar. But of late, the Canada dollar is now the temporary number one currency as far as economic overperformance. So yeah, digging into those individual currencies, looking at the Swissy down here. Okay, here's our manufacturing number we had come out yesterday, the retail sales number, January 5th. Bearish for obviously the currency and the Swiss stock market itself. They've had one good piece of news come out of these major ones that we follow, and that's the PPI number. But that was way back December 15th. And then we had a neutral reading on the 4th for unemployment. So that just very simply means they nailed the expectation right on the head. The economists actually got it right. So it's funny when you look through the economic heat map of all these currencies, because anytime you see a blue or a red box, that just shows you where the incompetent published claims number that did come in. Now, that was a bullish number where we did have the previous reading of 215,000, and they actually had forecasted that number to go up. And this is jobless claims, okay? Amount of people exiting the workforce temporarily because they lost their job, got fired, whatever the case is. But the number was actually only 199,000. So that was a nice report for the dollar. You add up all the beats and the misses on this, dollar is at a 45%. So I would say that's pretty neutral. It's not really great at all, but it's not horrible. It's not like the Swissy, the euro, the pound down in the teens percentages, right? So, and then, yeah, again, currently we have Canada, which is currently the best one. So it's exceeded expectations on 4 of its reports, most recent one being a few days ago for their manufacturing number. And that was an increase from 48.4 to 48.6. But, again, we're still in contraction territory. So, it is what it is. But this is currently as good as it gets, 66%, 2/3 of their reports. And then they had a couple neutral readings, a couple where they met expectations on the dot. Must have lost years of your life trading that. Yeah, it's funny, Alex. When I was doing that penny stock trading, I was also working a sales job. So I had to make 120 dials a day. It was phone sales, and it was for security. Home security. So I was doing that, and my boss at the time, she was super cool. She actually allowed me to do my trading while I was working. So I would always bring in my laptop, and I wasn't allowed to use the facility's Wi-Fi because you can imagine it's home security. So there's a lot of very sensitive information on the servers and everything. So they did not allow me to use my laptop on their Wi-Fi, but they did allow me to bring in my cell phone to use it as a hotspot. So I would have to keep my cell phone on my data plan. So obviously it not on the Wi-Fi as well. And I had to take my laptop and plug it into the hotspot of my phone. So by the end of the day, my phone was like 1,000 degrees. It was so hot. Had to keep it on charge constantly, but I was able to trade. I was able to trade, and I was doing obviously my currency trading as well. But at that time, I really hardcore focused on the penny stocks, and there's a direct correlation with my job performance at that time because I was with penny stocks. It takes your attention, or scalping, whatever if you're doing that, it takes your attention. You have to focus on that and that only. But that again reiterated why I love swing trading so much, because all I got to do is do my analysis in the morning first thing, set some alerts, and then I'm done. Midday, early in the morning, later in the afternoon, if I get an alert hit, great. It takes me 2 seconds to flip over to that chart to say, do I want to buy or sell? Put in my order, I'm done. That's what I love about swing trading. It doesn't interfere with work, doesn't interfere with anything else. Right. So yeah, I like to think I got my years back because I got away from the scalping, if you will. But swing trading, like I do, trading the 4-hour and daily confluences, coming down to the 1 hour from time to time, that's easy. That doesn't take any time. Right. So that's why I love swing trading. And it's where my edge is. That's just for whatever reason. That's where my edge is. I feel I'm pretty good, and I've got a really good handle on the higher time frames, the daily 4-hour. So if it ain't broke, don't fix it. Right? I mean, that's where I start my days. That's where I start my weeks. But if we go through a slow week or two, like we did for the holidays, then I'll go down to the smaller time frames. 1 hour, 30 minutes. I think I had a 30-minute trade last week on silver. I think it was. And then once in a while, I'll even go down to a 5-minute or 15-minute. But people don't understand it. There's so much noise down there. There's so much manipulation, even on established assets on those smaller time frames, that it's just overall not near as good as the higher time frames. So that again is why I love the higher time frames. It's just much more consistent, but most importantly, that's where the big banks and institutions are playing. Right? They have algorithms to play around in the 1 minute and 5 minute. Right? But when it comes to their prop traders and their institutional traders, they're typically on the higher time frames. So if you can't beat them, join them, ride their coattails, and that's exactly why I like those higher time frames. And yeah, sometimes I'll even forget I'm in a trade, like this NASDAQ trade. You know, yeah, I was sweating at Friday's close, but this week I haven't even thought about it. So that's when you know you're trading a system that works well for you, is when you don't even worry about it. Like I went to bed last night. I knew I was in unrealized profits. I knew I had my line in the sand. I knew even if it went against me, I was out and still made money. So I sleep easy. That's the point where we all want to get to, is how can I find a system to trade to where I'm not over leveraging myself, I'm not risking too much per trade, and I can sleep in peace at night. Right? That's to me, for me personally, that was the ultimate goal. So anyway, I digress on that. Yeah, like I said, Australia dollar, which of course we got their reporting coming out tonight. Yeah, again, this thing was lit up in blue, all blue, as recently as, well, I guess December 2nd was when we had that first bearish report come out. But yeah, it's been bearish reporting for the most part ever since. Okay, their PMI data, their services, manufacturing, okay, their cost of businesses, you know, increasing somewhat. So GDP number wasn't the greatest on that last reporting. We should be due for one of those as well coming up. But yeah, I mean, it's still okay. You know, 57% is okay. 57 is better than 17, like the Swissy has. Okay. Again, the Swissy is at 17. The euro is the same thing, 17. Okay, they had a bad manufacturing number as well. And then the British pound, 17. So basically that PMI data has been getting everybody lately. That's really the common theme here. So anyway, getting back over to the top setups, and we can take a look at some charts. Penny stocks, no. You know what I did wrong on that? Number one, I had a job. I tried trading while I was focused on making calls and selling home security. So I was that particular broker I used did not have a way to calculate your per trade percentage. It was just, you had to put in a flat lot amount. So number one, I didn't have a good broker because it wasn't calculating. I was probably risking 2, 4, 5% on some of these trades. I was just basically throwing in a lot limit, a set of lots. It was by the seat of my pants, wasn't paying attention. I took that account from 2,500. Okay. I put 2,500 of my own money in it and dropped it all the way down to 300. And I did that in about 4 months. Okay. So you could say I blew that account, right? But as all of us coaches have probably said from time to time, that is the best lesson we'll ever learn. I could sit here and teach you guys all day long this or that, but until you blow your own account, you haven't really truly learned rule number one in this business, and that's capital conservation. I even made a shorts video about this, I think a week and a half ago, 2 weeks ago. Our number one job as traders is not to make money. Now that may sound silly and ridiculous, and it probably is. But our number one job in trading is capital conservation, because as long as we're trading a system that conserves our capital, limits losses, cuts losses quickly, right? Then we get into those runners. Those runners are where we make our money. So again, that's why I didn't sell out on the NASDAQ, just because it was at that supply zone, right? Because I know that a runner, if we could just chew through that supply zone, knowing I've already banked some money, worst case scenario, then that next move up to that next higher supply zone or resistance line will just, it's going to increase the profits a lot more and wipe away even more of the losses, right? So, and I've been blessed. I got to admit, I have had a very good winning percentage lately. It's been like 65%. I just did all my numbers the other day. I typically am around 40, 45. But over the last month and a half, it's been about 65. So, that just tells me I'm getting just a little bit better on being picky. And it's really all about being picky because I ignore so many supply and demand zones. It ain't even funny. Wait for the extremes, wait for the fundamental and sentiment readings to be there and jump on. So yeah, good stuff on that camera. Let's get our camera back up. Get our camera back up real quick. There we go. All right. There we go. Let's get back into some charts. So NASDAQ, just to kind of put a bow on this, since that is the trade I'm in. Yeah, I've already got everything drawn up over here. Just going to let it do its thing. Looks like we are getting a nice little secondary push. Let's get back over here on where I've got my order in real quick. Okay, so there we go. So yeah, the last part of this last hour, we got a nice little push up. Now, I look at supply and demand zones on every single time frame, even if I'm in a trade. So look at here. We have, okay, just in looking at potential roadblocks for my trade, right? We do have this little supply zone here, newly formed. Okay, this one formed at midnight for me. So that's currently where we're at. Okay, we're currently bouncing into this supply zone that for me formed at 12 a.m. 12 a.m. my time. I'm in Kansas City. Okay, so I'm Central Standard Time. Now, price dropped into that demand zone, which I told you was my line in the sand underneath. But did this supply zone have enough power to blow through that demand zone? It did not, because it's obviously turned around and retraced. It came back to this supply zone. So am I really too worried about price bouncing off of this supply zone and dropping down to my, stop me out, my trailing stop? I'm not worried at all. Could it still do it? Of course. I don't know if it's going to drop. I don't know if it's going to go ahead, right? Just depends on what the banks are doing. But I'm just saying that I feel pretty good that it should be able to chew through that. The probabilities, if that makes sense. Most of the time, this will chew through that and keep going. Sometimes it will hit and come down and, break a new low. So I feel pretty good about that. So there's not really a whole lot else I think to say on the NASI. I'm just going to let it do it. And we'll take a look at some of these other assets. So gold leading the way at a plus 11. So let's go pull up our gold chart over here, guys. See what we got. Let's see what we got over here. All right. So gold has recently blown through this overhead supply zone. I drew up on a 1 hour time frame. Okay. So that's a good sign. That's a good sign that we've got some strength down here somewhere. Now, whether that's this demand zone all the way down here, whether that's this one up in here on a, what did I draw that out? 2 hour? Yeah, 2 hour. So you guys see this 2 hour candle? Think about it. This 2 hour candle, which partially formed from a previous resistance point. That's this white line I drew. Okay. We had a drop and then a one candle consolidation, and then it turned around and has now blown through this 1 hour supply zone. And that's to be expected. It's a 2 hour zone as opposed to the 1 hour supply zone. Remember, the higher time frames are typically your stronger zones. A monthly is stronger than a weekly. A weekly is stronger than a daily. A daily is stronger than a 4 hour, so on and so forth. Right? So as long as we focus more on those higher time frame zones, then it makes drop into the smaller time frames a little bit more comfortable, a little more easy, okay? A little bit more sustainable, higher probability. So anyway, we've blown through that 1 hour supply zone. So I could potentially, on gold, I could potentially see if I can find a smaller time frame demand zone in here. I would ultimately feel better if we push up a little higher before returning to price. Because as always, if this is 1 unit of the zone, I would want to measure 3 units above it, which would probably put me up in here somewhere. That would really make me feel comfortable about putting a little more of a full position on it. Now, again, full position for me, because I like to sleep at night, is 0.5% per trade, 0.5. 0.5. That's well lower than, because again, going back to the penny stocks, okay, that was lesson number 1 I learned. capital conservation. I'm okay with growing a little bit. I don't have to win the lottery and, double my account over a month, right? I'm not interested in that. It's not sustainable, especially for coaching and teaching newer people, right? I could probably get away with it now at this point, trading 2%. But I want to stay consistent, because consistency is what keeps you in this game a long time. Okay. Not winning the lottery, so to speak, on 4 or 5, 2%, 3% winners in a row, and then calling it a day and saying you're a guru. I don't want to do that. I want to trade. I want to teach this thing the way it's supposed to be taught. And that's why I kind of jokingly pick at a lot of technical analysis books, because they always put in there max 1 to 2% trade, 1 to 2% per trade, right? It's just too much for newer people, knowing that newer people are probably going to lose a handful of trades in a row. People in their heads say, "Oh, 2%, I have permission to." No, I said max. You should probably be down 0.2, 0.5 at least to start. So anyway, looking at silver, if we look at this 2-hour demand zone, let's go down to some smaller time frames here. I mean, I do like the volume that's in this area, okay, in the trade or in the zone and then on its way out. I do. I just wish that it would have left and chewed through the rest of the zone here. This is a 15-minute time frame. I wished, for me to be even more excited about this zone, I would have wanted to see it just continue through that zone. Now, it eventually broke through the zone, but as you can see, it took a whole day to do it. Okay, this is Monday's session overlap, London, New York overlap. That's the yellow background you see. So the orange is London only, okay, and then the yellow is London, New York overlap. So this is where New York comes in. New York's pre-trading or pre-market time. Okay, and then the green is just New York only, and then Asia is the red. So yeah, I mean, it basically hit that zone midday for me in the middle of that London, well, I should say mid-morning, London, New York overlap. But then it just kind of died out, okay? So yes, it broke through it, but now that I'm seeing this on a smaller time frame, I can't say I'm too excited about this. So I'd probably be more interested in the alert that I set down here. I do have another demand zone a little deeper. And as you can see, guys, this was the gap. This was the Sunday gap on gold, okay, when the CFD market opened up, okay? So because I had this gap, this is, this looks pretty nice. I mean, this is what you call a novice gap, okay? Novice gap in context of the overall higher time frame trend, which for gold and silver obviously is up. Now it's having its hiccups of late. Okay, we're on a daily time frame now. You guys, mid-October, we had that big decline. Everybody thought metals was going to hell, okay? But it was just nothing more than a pretty healthy pullback in the grand scheme of the overall uptrend, right? So obviously we've had the same thing happen at the end of the year, okay? Big decline. Had that awesome Friday move especially on silver. Okay, silver, we had that 10.5% increase 2 Fridays ago, only to see it drop 15, 16% the opening Monday, the next Monday. Okay. But equally, gold had a nice healthy pullback. But it's in context of the overall uptrend, right? Well, last time price dropped, obviously you guys see what happened. It caught a bid, bounced up. So for me, it may very well run off, and leave me, because I ultimately had a couple zones drawn up down here. Number one, just, if we got a much deeper, retracement. And then obviously I do have this smaller time frame 4-hour zone with the gap I just mentioned. This is where I will like to buy. I like buying these deep discounts. Okay. I like buying these deep discounts. But just because I like something doesn't mean the price cares. Doesn't mean that the banks care, right? Because they may very well take it now and just make all-time highs yet again. But if I don't get price retraced down to me, then I just miss out on the trade. Okay. But I have more importantly, though, I have obeyed my rules. Let's see here. I was just looking at a news piece. So yeah, it's all about following your rules, no matter what they are. Okay. So yeah, I'm going to draw this light green. And that just tells me that there's something fishy about it. Well, what was fishy about it? It didn't just blow through that zone. It hit and just kind of dilly-dallied and got lazy. So I'm more interested in the gap, okay, the gap up, the novice gap, if we do get that deeper retracement. Okay, looking something like this. That's what I'm more interested in. So that's why I've got my alert set down here on gold. Silver, we just talked about +7, +6. Okay, so anything 5 or higher is bullish. Now with silver, we're bouncing into this overhead supply on a 2-hour time frame. Okay, we got this 2-hour candle right here with a big decline after, which obviously dropped into this daily demand, and that's why we got all these rejection points over here. So I have an alert much further down. Okay, my alert's down here under this triple bottom or quadruple bottom, I guess you could call it. I think we talked about this yesterday, right? I would suspect there's probably some pretty good stop losses down here from these buyers, these buyers, these buyers, these buyers. There's probably quite a bit of liquidity under here. Just so happens, if we drop down to a 1-hour time frame, we got a 1-hour demand zone right here. Okay. This is that demand zone I think we talked about yesterday, right there. Which obviously pushed up pretty nicely initially, and then it got basey, and that's where it created the daily zone. So the daily demand zone, though, to me, it's dead, even though it's acting as a pretty good support right now. I want to go below that. So basically what I'm looking for, if we're talking Wyckoff theory, I'm basically just looking for the spring. Okay, the spring leg. The spring. So yeah, we just drop down, go below that, catch the liquidity, and then we bounce up. That's what I'm looking for. That's what I'm excited about. So we're a ways away from it. Probably nothing that's going to hit today. So, and because we are in that higher time frame supply zone, I can't really justify dropping down to a 5-minute time frame or a 15 and trying to buy a demand zone in this area. Okay. I mean, we could probably find one, but again, there you go, right there. So there's technically a 1-hour demand zone right here. Okay. Got a nice gap above the zone. Here to here. Okay. Pretty strong looking gap to me. Why don't I use it? Well, number one, yeah, it spent a little too much time in that consolidation area. If I draw my box over here, okay, to me, that's a lot of time spent. And it's also bounced into the higher time frame supply. So for me, that's a no-go on the smaller time frames. Okay. So yeah, ultimately just going to sit back and wait for the deeper decrease. Or if it keeps going and makes some new highs, then we can look at a future demand zone in this area. Okay. Maybe we get price do something like this. If we get price breakthrough and close above this this supply zone we were just looking at, if we get up and close somewhere in this area, then I'd be interested in a retracement to this demand zone. Okay. So that's one potential play right there. Can't do it right now, though. Okay. We cannot do it. I cannot do it with my set of rules because we're bouncing into the supply zone. Because I would expect the higher time frame supply zone to be stronger than the lower time frame demand zone. So yeah, that's basically the play on silver. Maybe this 1-hour demand becomes more appealing at some point, or maybe we get a new demand zone formed in this area where we're at currently. I don't know yet. So sit on my hands, going to get away from it for now, and we'll go on to our next asset, which is what we got over here, guys. We got S&P 500. So we got the S&P 500, the NASDAQ, obviously, and we've also got the FTSE. And then we've got a few currency pairs after that we'll get to in a moment. But yeah, let's take a quick look at the S&P over here. Let's go find it. Okay. All right. So what have we done with the S&P? Well, we drew up yesterday this 4-hour demand zone, and this demand zone right here. Okay. That, if you think about it, now this was the origin of this overall move up. But every single one of these candles along the way are overlapping the candle to the right. Okay. So that, to me, that's an efficient price action. Okay. On that particular time frame, the 4 hours. My first inefficiency is right here. This candle. Why? Because that's the first point where I have a gap, just like that. Okay. So there's my gap, my acceleration gap. Okay. And by the way, it pushed above this supply zone, showing a little more strength. What was that, 30-minute? Yeah, 30-minute supply zone candle. Okay. So yeah, our 4 hours demand pushed through the 30-minute supply, broke and break a structure and all that. So because all that has happened, I feel pretty decently confident that I could look to take a trade right here on the S&P. Okay. So again, it's a 4 hour time frame. I like to divide everything by 4s when I'm looking for confluences. So for me, 4 divided by 4 is 1. So I'll go to the 1 hour and make sure I have a gap here. Do I have a gap here? I do. Okay. There is going to be the gap right here. Okay. So I got a 1 hour gap. That's why I drew the 1 hour dash line. And just for kicks, let's drop down and see if we can't find a couple more confluences, 1 or 2 more. Okay. 15 minutes. Yeah, as far as gaps go, we've got a couple. Yeah, we got a couple here. So there's a gap there, okay, which is right at that same 1 hour, 4 hour confluence. Even if you go a little deeper, we got a gap down here as well, right? So there's another gap. So I got a couple gaps. So that to me shows that the demand pretty decently exceeded supply on all these different time frames. I like to see multiple time frame traders looking at the same price range. I like to see the 4 hour traders, the 1 hour traders. Okay. We all have a favorite time frame. So whether it's the 4 hour, the 1 hour, the 15 minute, guys, by seeing these gaps, it tells me that we got a lot of sets of eyes on that area. And the bank knows this. The banks know this. Okay. The banks chase inefficiencies to find the liquidity, the unfilled orders. Okay. So yeah, that's why I've got my alert set right there on the S&P. Now, obviously, guys, I am still in the NASDAQ trade. I don't typically like to double up my risk on any one particular asset. So if I'm still in this NASDAQ trade, I may avoid it, but it's going to be kind of hard to avoid it when you see the volume that's come out of it. And all the odds enhancers, again, that we just went through, the break of structure, the break of the supply and all that, the efficient market below it. So there's a lot of cool things about that, again, on the 4 hour time frame. So if I'm closed out of the NASDAQ trade, though, yeah, I'll definitely be interested in hopping in this one. Break a structure, the upside. I mean, and a bullish signal. I mean, this is a pretty good spot. Now, it is high on the curve if we're looking at the higher time frame curve, because if we're looking at the higher time frame curve, then obviously here's our swing low, there's our swing high. You guys can clearly see we're in the top third of that. Okay, that's going to be this. That's going to be this line here. So ultimately, the deepest discounts are down here, but that's a long ways away on a bullish signal. So if you got a bullish signal, man, a lot of times price doesn't come down to those deeper discounts I like to look for. So yeah, anything up here would be a trade. It would just be not a full position. Okay. So that's S&P. Let's look at some currencies. So just taking a look real quick, guys, we've only got a few currencies. Okay. We got the pound Swiss is our lone bullish signal. Wow. That's it. And then as far as the potential shorts, potential bearish items, we got the Euro CAD and we got the Swiss yen. Again, I don't trade dollar South African rand. I just don't have it on any of my broker pages. So we'll skip that for now. But yeah, as always, if you guys have anything specific you'd like me to look at, I can definitely do that. So let me know. But yeah, let's take a look at pound Swiss real quick, since it is our lone bullish currency pair. I'll go back on over here. Pound Swiss. Here we go. What have we got on Pound Swiss? Well, what are we currently doing on Pound Swiss? Are we at a resistance point? We're at a pretty strong resistance point. So we got a daily supply zone, and I'm just going to move it to get it out of the way. So I'm just going to move it back over here. But yeah, obviously there's our daily zone. Okay. Looking at this daily candle here. Now this daily candle, was this a very strong daily supply zone? If you ask me, I don't think so. I don't think so, because did it break a structure? Did that supply zone break the structure underneath to the left? No. You guys see I drew up a demand zone and colored it light green, right? Okay. So let's drop into a time frame. And you guys see right here, 4-hour demand zone. Look at that gap. That's nice. If I wanted to tear this demand zone to pieces, I could on a couple different things. Okay. Because number one, well, the main thing, I guess, is the fact that there was very little volume, very little trading activity in these handful of candles. So for that reason alone, for that, that's one -1, if that makes sense. Okay. A -1. If I'm putting points in, if I'm adding up all the points, 1 point for every reason or excuse to get into a trade, to me, that would take away 1 point. A big point, though, because I like to see a lot of trading activity in the small time that a zone is being created. But there's no denying that really nice bullish, impulse candle coming out of it. It's an impulse candle because it broke a structure over here. Well, my bullish signal was formed after price had already came down and jumped into the zone. But another odds enhancer for that zone was the fact that you see that blue dash line going right through it. So that's a former support or resistance line. Okay, if we go further back in price history here, let's see here, right here. Okay, this swing low from way back on Liberation Day, the end of Liberation Day. Okay, big gigantic drop on all the scares of the tariffs, right, before everything went into effect. So that was the swing low point from that day. Well, you fast forward to today, and that's exactly where that demand zone line is in. Okay, it came down. It collected unfilled orders from the 4-hour demand, as well as the point where everybody else was watching. People remember price points, especially when they're heavily created around in and around a geopolitical event. Okay. So there you go. Just because I didn't like the demand zone didn't mean a lot of other people did. Didn't, right? Didn't have the volume I wanted, but it still caught a bid, caught those unfilled orders and pushed price up. So that would have been a nice trade. But again, that touched before I had a bullish reading. So it was still neutral back here. So that's why I avoided it, right? I'll go weeks sometimes without looking at specific currency pairs, just because I don't have a good fundamental or sentiment analysis reading on it, right? Is there anything similar to Edge Finder? I think I asked you this before. Yeah, you did ask me this. Yeah, I mean, I don't think, I mean, if you wanted to pay $2,000 a month to go get the Bloomberg terminal, you could. I mean, that's pretty pricey. But yeah, I don't know. I mean, I'll tell you, if I didn't have the Edge Finder, I think what I would probably do, going back over to our reports, okay, if I didn't have Edge Finder, probably what I would do is just get an Excel spreadsheet created and just make into each cell I would put the name of the report. Well, let's just do it this way, actually. Okay, the names of each report, and I would just yeah, that's probably what I would do. So yeah, get an Excel spreadsheet and then all the names of the reports, which again you can find on FinViz, like we talked about, I think the other day, or Forex Factory. Going back to Forex Factory, I guess this would be the easiest way to do it. Okay, take a look over here at all your different growth, inflation, employment numbers, and just make a line for each report. And then if you were to, it's going to be time consuming, but if you were to go through and look at the recent reading for that report and just simply ask it one question: hey, did it beat expectations? Did it miss expectations, or did they nail the number right on the head? And just simply put in a +1 for that specific number if it exceeded expectations. And if it missed expectations, it's a -1. So it basically kind of becomes a little bit of a math equation, just a simple addition, subtraction. Hey, for all the inflation, growth, jobs numbers, all that, if you're adding all the +1s, the -1s, the zeros, if it hit expectations, at the end of the day, you come up with a total. So if it's +5 or higher, you get a bullish reading. If it's a -5 or lower, you get a bearish reading. So yeah, I've never had to do that just because I've used the Edge Finder. Yeah. Sorry about that. I don't know of any other items though, to be honest with you, because this was the first of its kind when I saw this about a year ago. Well, I've known about it for a few years, but finally got buckled down and got it about a year ago. Xander, what's going on? What trades are you in? What trades are you looking to be in? Guys, I can be on here another half an hour. Looks like we are already at almost 7:30 my time. Where are you guys at, by the way? Xander, Alex, I think you were in the Caribbean somewhere. Yeah, remind me where you guys are at. I was just curious, just so I know time frames. And by the way, do you guys like this time? Because I've been considering playing around with some times, but I know we've kind of moved times around quite a bit. Just trying to find the right mix. So does this time frame work for you guys? Or is it easier for a little later in the day? I don't know. I'm curious. I think I'm going to run a poll on my my YouTube posts where we do the posts. So yeah, I don't know. Still playing around with it. Trying to figure out the best way to get more viewers, Obviously, I started this in the middle of the holiday season, so definitely not the best time to start your own project, streaming project, when everybody's distracted with the holidays, and rightly so. But yeah, Alex, let's talk off. Send me an email. Let's talk off stream about that. As far as the the best way to track that. If nothing else, I could probably help you come up with a pretty good spreadsheet, pretty good Excel spreadsheet, a way to track that stuff. Oh, that's right, Xander. You're in South Africa. That's right. 15th. Okay, so 3:30 your time, 15:30. So it's sweet. So you like this time? Okay. No, I like the morning time. I like this time in particular just because it's, the end of, well, not the end of, but towards the end of London session. And, well, it's the overlap, right? New York opened their doors about a half an hour ago, kind of their pre-trading rituals and routines, digesting all their news, all the news that happened overnight in Asia and Australia and all that. And they come in at 7 a.m. my time, which is 8 a.m. their time, kind of do their rituals. So basically it gives them an hour and a half, talking about the banks and the hedge funds, gives them about an hour and a half before the main markets open to digest everything. So it's just kind of a nice, I think it's a kind of a nice little time. I like it. I mean, I wouldn't mind getting a little more sleep, but I love getting up early for this stuff. It's great. I got the school run starting up tomorrow, so this won't work for me, but I mean, whatever works for you a little later would be better. Yeah, I'll probably do that. I'm going to probably come up with a poll. Okay. If you guys can help me out with that, I'll come up with a poll question just to see what, see if I can get some more people reply to that, and just see if we need to change times around or something. I mean, obviously my goal would be to do the time for the biggest number of you guys, right? Obviously I wouldn't be able to please, each and everybody. That'd be impossible, but Asia from 1 a.m. to sleep, wake up 7, go to my shop, man. That's wow. So that's 1 a.m. your time. 1 a.m. to 4 a.m. Go to sleep, wake up. Man, that's hardcore. I like it. I like it. Yeah. So yeah, guys, that's my goal. I ultimately want to make sure I'm doing this at the time where I can try to benefit the most amount of traders. So I'm pretty well open to it. But yeah, we'll play around with it along the way. Where are we at, guys? Let's see here. Pound Swiss. Yeah, let's just finish up on that over here. So on Pound Swiss, I have identified this 4-hour demand zone right here. And yeah, 4-hour demand zone. Now, this is a pretty big overall cluster, you know what, right? Just like almost a month solid of sideways garbage when you're looking at it on a daily time frame. All those wicks above the bodies, all those wicks below the bodies. And then finally, we've bounced into this, again, daily supply zone, which I'm not really that worried about because, again, it did not have the strength to drop through this 4-hour demand zone. Okay. So think about it. A higher time frame supply could not even break through a lower time frame demand. So do I really want to be too worried about it? I don't know. Probably not. We do have obviously some more zones up top above it. But anyway, just looking at this alert I set. Okay. Again, I would be interested potentially in buying here, but definitely not a full position. Okay. So whatever somebody's number, whatever somebody's max is. Now, you guys know I do 0.2 to 0.5, but if somebody's max is 1% or 2%, I wouldn't be wanting to do that. I'd be wanting to at least cut that risk in half, if not a third. So that's why I like 0.2 to 0.5. I would venture to say, guys, excuse me, because it's hard to find a perfect setup with all the parameters that we look for. I don't do very many of them at the 0.5%. I really don't. It's usually 0.2 to 0.3. Okay? But I've got 350K in challenge account. So when you have that's the beauty of having a challenge account. Or obviously, if you have a pretty good amount of money, you don't have to risk 1% and 2%, 3% to grow your money because you've got the leverage. So that's the beautiful thing I like about the prop accounts that we have, right? Just being able to risk the smaller percentages. Again, the goal is to stick around for 20, 30, 40 years, not just be a here today, gone tomorrow type of thing. So anyway, guys, 4-hour demand zone. Let's divide that by 4 and go down to a 1 hour. Okay, I got a gap here as well. Let's drop down to a 15. Let's see here. Do my gaps look any decent over here? I mean, yeah, we technically have a gap here to here. It is not the strongest gap, got to admit. Okay, that's really not the strongest gap, and I had to zoom in for it to look that big. Okay, there's your gap right here. Is that really that potent? Can I really trust a 15-minute gap like that? No, I'm probably going to go look at some other time frames. What's a 30-minute give me? A 30-minute time frame. Well, it doesn't give me anything. Okay. Now up here, there's a gap, but that's outside of my zone, right? And again, that's a pretty tiny gap. So nothing on a 30, nothing on a 15. What about a 10 or a 5? Do I have anything down here? Yeah, at the bottom of the zone, you do. Okay, there's our here's our 10-minute gap. But again, it's kind of small, right? That's a small gap. Let's drop down to a 5-minute. And this is as low as I go on a trade like this. What's my gaps look here? Do I have any gaps here? Okay, so the gap looks a little bit better, but again, we're magnified into a 5-minute time frame. So there's a gap. So if I'm looking at the 4-hour, 1-hour confluence, I like the top part of the zone. If I'm looking for an extra zone or an extra confluence, even though it's a 5-minute time frame, I got a gap down. Oh, wait a minute. Did we touch right there? Oh, never mind. We can't use that. Why can't we use that as a gap? Let's zoom in. What did we got? Did that wick hit the gap? Yep, sure did. So do I really now, do I want to trust this gap? It's just like, did price hit a zone, right? Once zone hits, once it's been mitigated, I typically don't like it anymore. Kind of the similar thing with gaps. Okay. Once a gap's been touched, it's just not as appealing, because there are gap traders that look at gaps like, similar to supply and demand zones, where they're making their buying excuse me, guys, where they're making their buying and selling decisions, from that. So I don't know. I'll be honest. I like the zone. I just dislike the fact that I only have 2 confluences. But 2 is better than 1. Okay. 2 is better than 1. So again, not a full risk of a trade, just a small risk. All right, what we got over here? Xander. 0.5. Oh, okay. Xander, so you're saying 0.5% risk. You freak out on that. Hey, you know what? That's fine. That's fine. I think I'd rather hear you say that than say, "Oh, that's nothing." Because it's when people say, "Oh, that's nothing," those are the ones typically losing their counts, getting getting breached or just blowing your account. So, what's your risk again, Xander? What do you typically like to risk? Is it the 0.5, or do you go smaller as well? Yeah, I'm just curious. It sounds like you're down there where I play. Yeah. Now I feel, guys, with my successes I've had of late, I feel like I could go up to a 1%, 1.5% just fine. But I just, I don't want to do it. I don't want to do it because if it ain't broke, don't fix it. And no matter how good of a setup I think I have, or trading style, it's still going to have there's still going to be a losing streak there somewhere. That's just the way it works. Okay. You're going to look at the big banks' equity curves. Okay. They have big declines too. Now, I think a lot of it is because they have to accumulate and distribute into their positions, right? So they expect to get drawdowns, right? But when they get to an 8% or a 5%, or a 2% daily loss, they obviously don't have to worry about breaching an account and losing their account, right? It's their money. Obviously, we doing our trading challenges and such, we have to worry about that. So, yeah, enough said on that. Pound Swiss, that's it, guys. Nothing really more to say. We did bounce into this overhead supply. Okay, we bounced through this initial supply zone on a, what was that, 1 hour, 2 hour time frame? Yeah, 2 hour time frame. So if you guys see, we do have a 2 hour supply here. Now this supply, I don't think first of all, it's already blown through it, but I really wasn't worried about it to begin with, just because, well, no, I guess it didn't touch. Okay. Yeah, a very little gap. That was it. Very little gap. Now up here, the very top of this daily supply, we got again, we have a littler gap. But the other thing too is it's a former resistance point. So I guess I say all that to say I'm really not too worried about this supply. I'm not. If we come back down to here, okay, then I'm definitely probably going to take a stab at this. Now we're still about 45 pips away, or 50 pips, something like that. But think about it. This demand zone's already blown through this supply zone. It's already blown through over half of the daily supply as well. So I feel pretty good about this. Yes, it's a lot of trading action to the left, but look at that strong move away. Look at this gap. Look at this gap. I mean, that's a pretty nice gap. Is that not a strong gap? I would say it is. Looks like a pretty strong. The gap's way bigger than the demand zone. I like that. I love that. That's an explosive move away. That shows that demand heavily exceeded supply and was able to push price all the way through an overhead supply, break these structures over here, this structure over here. So I like it. That's the play on pound Swiss. Excuse me. MTO change that. Doesn't exceed 0.5. So I have a trade on gold. I risk 0.2. Yeah, it sounds like you're trading exactly where I'm at. Yeah, because I stick with that 0.2 to 0.5. And most of the time on the lower end of that. 200,000. Okay, funded. So why go large on risk? Exactly, Xander. If more people thought like you, we'd have a lot more, lot more successes. Too many people look at trading like a slot machine, right? Throw your money in, pull the handle, and wish it luck. So no, that's great. That's great. Yeah, you've mastered it. That's most of your way to success right there. Is just figuring out the risk management. It really is, because there's 1,001 different ways to trade, 1,001 different trading strategies. Mine's not necessarily the best one on earth. I acknowledge that. But again, it works for me. So, but number one is risk management. I mean, I'll harp on that for the rest of time. risk management. And it's easy because, again, I learned my very valuable lesson just going back to the outset of the show, right? On the penny stock trading, 2 and 3 and 5% risk per trade, right? I'm glad I blew that account because it taught me the best lesson I ever could learn. And every one of us coaches have a very similar story because we've all blown accounts. And that's just where, we wouldn't be coaches if we hadn't have screwed up. The only reason we're coaches is because we've probably made more mistakes than the average person, right? Difference is we learned from that and we adjusted. Try, fail, adjust. So, no, good stuff. My mentor, when I started, trained me on challenge accounts. Yeah. You know what? I didn't know a thing about challenge accounts till about a year and a half ago. Probably 2 years ago. I had heard about challenge accounts about 8 years ago for the first time, but that's, I think, back in its infancy. And there was a trader that I followed on YouTube. His name, No Nonsense I think it's No Nonsense. I think that's his YouTube name. No Nonsense FX, No Nonsense Forex, something like that. But yeah, he was a prop trader, and I did a lot of watching. Now he's heavily dependent on indicators. So at the time I had, guys, my chart over here just looked crazy. I had the commodity channel index. I had all the different moving averages, RSI, which is the only thing that stuck, MACD, all the different indicators. I had all that crap on my chart because that's what he was doing. And I just realized after some time, I don't need all that crap. You get to a point when you put in your 20,000 hours of looking at charts that you can see where probably a moving average is going to be, or where all the other indicators are going to be. So that's a very liberating day when you get to a point to where all you really need is your candles. And then obviously you want to know where, the trading activity is, and then maybe an RSI to find divergences. That's about it. You don't need all the crap. Too many people, especially newer traders, have way too freaking many indicators, right? See, this is a graveyard of all the indicators I've used at one point. And right now I just used 2, okay? Use my RSI, relative strength index right there, and then my volume spread analysis, or the VSA down here. That's it. I don't use any of this crap anymore. I don't need it. Now, from time to time, I like to use my correlation coefficient indicator just to see, hey, is gold mimicking the US dollar? Or is it converging or is it diverging, right? Are they trading in the same direction or are they trading in opposite directions? I do like to use that still from time to time, but other than that, it's just a bunch of shit. I don't need it. Okay? But it's nice if, it's still there. It's just kind of funny. I leave all that there just to look and see how far I've come. Hell, I don't even have my CCI on there, the commodity channel index. But anyway, I digress, guys. Whenever you get to a point to where you can just look at a naked chart and see what you need to see, then that's a good day. It eliminates the noise. It makes my brain a lot less like it's about to fall out of my skull. Okay. Just all I care about is supply and demand zones. Where are they at in relation to the trend? Where are they at in relation to fundamental sentiment analysis? Which I have a top setups algorithm to show me that. So, okay, good stuff. So I've got about 14 minutes. Let's go back. Let's see. Oh, okay, so we're done with pound Swiss. So let's look at Swiss yen and then Euro CAD. And if we have time, we'll take a look at the FTSE, but I want to end it on these bearish assets: Swiss yen, Euro CAD. Okay, so Swiss yen, this is the most bearish asset I have right here. Now, what's this asset doing? this thing going up or down? It's clearly going up, right? This is a daily time frame. When in doubt, zoom out, right? So we're in a very further down. There's some more zones. I won't worry about pulling those forward because all I really care about is this immediate one here. It's also a form of resistance point, okay, going right through that demand zone. So I have to be aware of that demand zone no matter where I, if I were to try to short this market. Okay, let's go down to a 4 hour. On a 4 hour, you guys see I did draw up this this zone Sunday, I think it was. Yeah, Sunday night. This supply zone did break a structure. Actually broke a double bottom, did it not? Got a low here and a fairly equally low here. This supply zone forms. We had an expanded range candle that created our gap. There's our gap right there. Okay. Did that price ultimately go 3 units, which is my personal rule? Doesn't look like it did. So if that's 44 pips, we measure to the bottom here. Okay, that's 87 pips. So that's about 2 to 1. That would have still got me, excuse me. Guys, my throat. I lost my voice yesterday and it's not come all the way back to me yet. But anyway, so yeah, the 2 to 1 on this short side. Now I didn't have the Swiss yen as a sell yesterday. Okay, when this zone was created, it was still a neutral. It was still a neutral asset. Camera. Okay, let me get my camera back. Give me 1 second. All right. Yeah. Okay, there we go. So yeah, Swiss yen. Okay, again, looking at it on a 4 hour time frame. Okay, 4 hour red candle, expanded range candle that broke structure and left a big gap in its wake. I like that. The gap actually was from here, so the bottom of the candle to this one. So what happened? Price returned. Let's see here. Go down, divide by 4. We go down to an hour. On a 1 hour, you guys see that white dash line right there? That was my 1 hour candle, my 1 hour supply. I don't use any of these candles going back to the origin of this move because they all overlap. Okay, all these candles overlap. My first spot where candles do not overlap is right here. Because on this particular point, now we're looking at our gap being from the bottom of that to the top of that. So there's our 1 hour gap, which means this would be the 1 hour supply. Okay, there was my 1 hour supply. Did price hit it? It did. Did we wick in? Sure did. So that would have been a good sell point. Now, I did not even, I wasn't even paying attention to the Swiss yen. Okay. Wasn't even paying attention to it. If I'd have been paying attention to it, that'd have been a good trade. That'd have been a good short. Because now I can look at this in the context of a 1 hour and measure my range. Okay. If my supply zone is 18 pips, what's 18 times 3? 9, 18, 27, 36, 45, 54 pips. It's 91 pips. So that's way better than a 3 to 1 reward risk, right? So that was a pretty good short, which I didn't get into. I drew up. Oh yeah. And as you can see, now that we know that was a supply zone, you guys see I drew up another little red box. Okay. This little red box. So this was my second chance entry. So what time frame did I do that on? I think a 5 minute. No, it was even smaller. Was it 3 minute or a 1 minute? Oh, it was a 1 minute. Look at that. I drew that up on a 1 minute. Okay. So here's our second chance. 1 minute candle, 1 minute supply. And you talk about reward risk. Okay. That's pretty nice. 6-1, 7-1, 8-1, something like that. I don't know. That was my second chance. That's why I had my alert set there. Because I was waiting for price to return to that 1 minute candle. But we never got the retracement, right? Price fell away. It fell away because I wasn't paying attention to when it very first entered the zone to begin with, right? Which again is this 1 hour. 1 hour inside of a 4 hour. Okay. So it just goes to show the power of these zones. And Yeah, that had to have still been in. I'm assuming that, yeah, it must have not changed to bearish until after it had kind of rolled over. But it just goes to show, guys, sometimes the fundamentals and the sentiment doesn't even matter. Damn it, there it went again. Get my screen. Okay. So yeah, there you go. So do I have a play now that we've missed the boat? Not really. I really feel like at this point, we're going to have to break this structure. Number one, let's break and close below this structure. And then maybe we could potentially use this candle as a new supply zone. But I don't know yet because I haven't broken a structure. I have to break the structure on the bottom side to use this as a potential supply zone. I'm just going to leave it very light red at the moment just so you guys can see. This is basically my path. Where price is, if I want to short sell in that supply, I have to first break this swing low. Okay. Got to break it, close anywhere down here. Make sure we're getting at least a 3-to-1 reward risk. Wait for retracement. Enter my short sell and buy to cover ahead of this demand zone. So that's the play on Swiss yen at this point. If I try to get into a short because that supply zone is working out, I would be FOMOing, I would be chasing price and dramatically decreasing my reward on this thing, reward to risk ratio, right? This is where people get in trouble. They see this move, price starts coming down in this area, and they're like, I don't want to miss out on this trade. I want to jump on because we're going to zero, right? Am I good now? Okay, got it. So anyway, yeah, that's we don't FOMO. Okay, I'd like to teach people not to FOMO because FOMOing gets you nowhere. It might get you a win or two here and there, but it's just not sustainable, right? So anyway, that is it on Swiss franc. I'm just going to let her set. And then lastly is the Euro CAD for a potential short. And where are we at? Okay, supply zone up here, as you can see. That's going to be on probably a 1 hour. Is that a 1 hour? No, 30 minute. I think it's 30 minute. Yeah, 30 minute. So we got a 30-minute supply zone up here. All right, let's take a look at it real quick. All right, it's pretty strong. I got to say, it's pretty nice. Price based. We had a big expanded range candle. We had a 3-candle drop. Volume started picking up, or trading activity, rather. Okay, since we're talking Forex over here, currencies. Broke all these structures to the left. So I want to definitely keep an eye on this area. But, you know, it would have been nice if I'd have had a higher zone, a higher time frame kind of confluence. I don't think I really have that. Yeah, I don't have a daily. I don't have a 4 hour. See, I can't use a 4 hour as a supply zone because if you look at this candle here, it touched this candle here. It overlapped. If you look at just this red candle, it overlapped this candle here. So there's no 4 hour confluence. I can't use a 4 hour time frame. And then, yeah, same thing on a 1 hour. Well, 1 hour did give, okay. So technically the 1 hour time frame did give me this. If we're looking at this green candle, okay, let's look at this for a second. So we did have a 1 hour candle with a big move down that did leave a gap. Problem is this wick. Okay, for me to be excited about this candle as a supply zone, I don't want to see that wick right there. That wick just changes a lot of the structure on this thing. So that's why I personally ignored the fact that it's showing a 1 hour time frame and focused more on the fact that we've got, well, the 30 minute. So again, just to finish up on this one, okay, we're looking at this 30-minute supply. That's beautiful. That's sexy looking right there, if you ask me. So we'll see what happens if we get a retracement there. But yeah, I got to be honest, you know, it's going to be slightly an uptrend by the time it gets there. And there's a lot of congestion there. So this may be a very small trade, only if I get that bearish engulfing candle coming out of the zone. Bearish engulfing, maybe a really strong wick above the body, and then have some volume spread analysis candles jump up, right? Showing that it's a lot of trading activity taking place. Because if I see the VSA, okay, these candles down here, if I see those candles start turning yellow and turning red, then that tells me that it's not retail trading. That tells me that that's an institution trying to short that market. Okay, because they're the only ones that can create that amount of volume. Okay, so the jury is out on that, but that's really about it. I think EuroCAD's probably on the lower end of my list. And then I think the only other thing was the FTSE, guys. And then we'll get out of here for the day. UK 100. Okay. So we have let's go to a 4-hour. Okay. It's trying to form a new 4-hour demand. Now, the jury is out because this candle hasn't even closed. And we have to see if the candle after that gives us a gap, right? So I can't use this as a 4-hour demand zone yet. What about a 1-hour? Let's see. Let's go to a 2-hour first, actually. 2-hour, no, because that was a gap. There was no gap there. Okay, those candles overlapped. Stepping back to a 4-hour for a second, and you guys do see I've got. Let's do this. Let's get this out of the way. Okay, you guys see that we do have a candle here with a gap on a 4-hour, so we could look at that. Okay. We could use that as our 4-hour. Hey, that would be our 4-hour demand. Do we have anything on a 1-hour? Do we have a gap? You technically have a gap there. So basically, we would put our 1-hour line here showing our confluence. What about a 15-minute? Now, on a 15-minute, it actually looks a lot better in the deeper end of that 4-hour zone. Okay, because there's clearly a gap down here that looks even better. Okay, you got the gap there. There's really a couple of gaps here. Okay, it just depends on how you want to draw it up. There's a gap there. There's obviously a gap from the, from there. Okay. So there's a couple gaps down here. So basically because I've got gaps above, I've got gaps down towards the bottom, I would probably just utilize this as a 4-hour, entry with a stop obviously below. And I think that's about it. Yeah, 30 minutes. 30-minute time frame, same thing. This would be our 30-minute gap right here. Okay, that 30-minute is basically the same as the 15-minute. So I need to put an alert in here. I just realized I don't have an alert. So let's get an alert set on the FTSE. It is giving me a bullish score. We'll see if anything comes to fruition on that tomorrow when we come in. But other than that, guys, it's really the same story I finished with yesterday. I'm just going to keep an eye on my NASDAQ trade and see how much it wants to pay me, right? See how much it wants to pay me. Keep in mind, okay, just recapping the whole thing. Okay, I had my 4-hour demand zone over here with a really strong push up, broke structures to the left, okay, showed its strength. Volume really picked up inside and exiting that zone. So price comes back, get our 5-minute bullish engulfing candle. Okay, 5-minute bullish engulfing. Just to go back here real quick. Right here, we had our 5-minute bullish engulfing candle, big wick underneath, volume strong. Okay, that was my entry, and it dilly-dallied around for a while before it finally caught enough bid. We gapped up Sunday, which was a welcome sign, and we just kept going up ever since. We have bounced into the 1-hour supply zone. We have rejected off of it. Okay, and I have put my stop loss. I've trailed my stop up below this 5-minute demand, and that is my new line in the sand right here. Price came down, bounced off that 5-minute demand zone as I anticipated, and now it's going up into this new supply zone. So it's basically contracting itself as we speak. Okay, contracting itself between the rest of this supply, this demand. There's obviously another demand below. I could see this thing very easily going sideways for a while, but I'm going to stick with it. If we come down, it's going to close me out there for about a 1.5 to 1 profit. Otherwise, it's going to go through the rest of that zone and give me an even better trade, even better. And yeah, we'll see what comes of the news tomorrow. We'll talk about Australia's reports. Okay, the results of their reports from tonight, because again, they've got their CPI info coming out. Okay, their inflation numbers are coming out tonight. So we'll take a look at the results of that tomorrow. See if we can't find an Aussie play tomorrow. So with that, have a wonderful day. Cheers to you all. Much love. Talk to you then. Mm-mm.